Yeah, so right, let me share a screen, and today is like a good example of it, right? Because we know that, you know, potentially we're potentially, not saying we definitely are, but potentially we're coming into an area with like swing potential, right? Like that being a swing back up to, you know, reach these higher supply levels, something here, you know, even if we just pull back up to this, it's still 100 odd pips away from the bottom there, 60 pips, you know, but it's knowing when when these trades are holdable and when you should be partialing, when you should be, you know, doing all of this sort of stuff, right? And this morning is a good example, right? So this morning, like, you know, we come in, right, we can build narrative for this high getting taken. It's got very little inducement. You know, we've had a big V-shaped recovery. We'll likely see an attempt on the high after such a big sweep of liquidity, all of that sort of stuff, right? But now, are these trades worth holding full volume and letting continue up, right? Well, the answer here is no, right? Because we've got to look at this as like what we're seeing, right, is we're seeing the 4H do this, right? And potentially we're getting in here to trade back up to here, right? That's the idea, right? It may not happen from here. We don't, you know, we never know, but yeah. Then we get, you know, 15M coming down like this, right? And then anything we get in here is before this break of structure. So what happens after a break of structure? Well, likely we get a pullback to mitigate something there, right? And we don't know how deep that pullback is going to come. We can say lots of stuff like, yeah, we have a flip zone here, you know, we have valid levels here, here, down here potentially, right? But the only, like the time we want to really hold this trade is when we catch that next higher low, right? Or the potential higher low, or, you know, we get something like that and we catch the higher low there, then that's when, because then we've got real alignment, right? Same is true up here, right? Here we see this bullish structure, right, up to here, right? So if you get in here, even here, I'd be partialing here because we don't know whether this, you know, this low has created to a degree, but then we start seeing this, right? Price delivers bearishly here, break structure, we get in a trade that could potentially be the lower high, right? So this trade here is a trade you want to hold more volume on, right? And just fuck the pullbacks, you know, like I know a lot of people struggle with that, but it's understanding that this is potentially not an intraday trade, right? This trade could well go and do hundreds and hundreds of R, right? Or any trades here from this like lower high here, right? But it's just going with those that alignment stuff, right? Like here, when we're getting in these should all have targets, right? Because we're against higher time frame structure, all of that sort of stuff. We very definitely haven't caught the higher low here, right? Or the lower low, right? Like that would be a trade from here. This trade, again, we could potentially target at having higher prices, right? But anything here, we want to be thinking, okay, we want to get volume off of this, right? Like volume when it runs the high, volume when it hits a supply level, something like that, right? Like here is a good example, right? We run into this supply level, we get in a nice trade here potentially, and then we can take that. Yeah, that makes a lot of sense to just target that, right? Because we have to realize that, and this is that whole thing about being like noticing where you are in the range, right? Is you've got, right? And it's like, this is the higher time frame range at this point in time, right? Right, yeah. So anything in here, we don't want to be like holding to the floor, right? But then here, we don't have to be so worried that this isn't in the top third of the trade because it's pro-trend everything, right? And really, these are like these trades here, this one from here. These are the only things you can really call swing trades, right? Because again, like, or if you're catching like the top here, not that I have any fucking clue how you would have caught that, that's going to be one for the mystery books, but yeah, and that's like, mainly that's the thing about knowing when to swing trade and when to intraday trade, right? And it's a place a lot of people get trapped in, because we end up taking a lot of intraday trades, right? We always feel the need to target something very close, right? Like this is a prime example, right? People get in up here, right? This trade should not be targeted at this low, right? Yeah, you can take some partials there if you really must, right? But you have to realize what you've got, right? You've got this as your 4H swing structure, right? And it's like, it's noticing when trades are really high quality and when they're not as high quality, right? And then we've got this, yeah, this, break of structure, no break of structure. So we technically have a lower high here, right? Then we have another break of structure and another lower high here. So if we're catching this lower high, right, everything's aligned. Like this should just melt, right? Price delivers down, then we can catch this lower high. And these are all swing trades, right? Because now you have to be looking left and going, well, what's over here? All right, well, not a lot. Right, like your next target reasonably is this level down here. That was, I can't remember what that was, but yeah, there was a reason for potentially pulling trades there, right? But it's all pro trend, right? That's like a proper swing trade, is catching pro trend trades, right? Like hold it to hell, yeah, exactly. Like shit like that, you really you should be holding to hell. You know, like there's no point in closing that trade early, right? Because reasonably, if you ever look at a pro trend trade, when you've actually caught a lower high as well, like by this point here, right, you know that you have caught a lower high when that breaks, right, which should be your target at minimum, right? You know that you're in a pro trend trade because you caught a lower high, right? And if you look, whenever you catch a lower high, right, or a higher low, like here, right, price runs. Right here, you catch a high low, price runs. Right, okay, this is a very quick swing trade, but yeah. Then, you know, if you catch this up here, right, this is a slightly harder trade to read because we do have reason for price coming up. But yeah, like if you catch this trade here, again, this is swing trade, right? You're going to take out structure. Once you take out structure, price has no reason to come back above here, right? So this trade can be held and hedged, right? So you can hedge this here, right? You can potentially hedge this like in here, in here, in here, right? But then when you catch this lower high again, this trade should just be held, right? Because it does stuff like that. Even, you know, over, and it's especially important like when you've had like large consolidation, stuff like this, right? Like up here is another good example, right? If we look here, right, what do we get? Well, we get this bullish structure here, right? Down to there, we take that out, right? Okay, this trade here could very well be a swing trade, but we don't have like confirmation of that yet, right? But once this goes and we catch like this trade up here, right, that trade is a swing trade again, right? Yeah, price may come back up to mitigate depending on where you've got in the trade, but that's a whole, like this is all on the theory that you caught the top basically. But yeah, say you get in here again, right? This is swing trade, right? Because you're now breaking structure and catching lower highs. Again, this is swing trade, right? This should not be targeted just at this low. This should be targeted lower than that, right? Because you're trending, right? Again, here, you know, depending on it, a lot has to do with where you get in the trade. Like if you're like halfway down this leg and there's an OB, then yeah, you find a target. But if you catch the top, again, here, this is like proper swing trade in here, right? We've got this huge bearish price delivery here. Price comes up, you know, say we get in up here somewhere. Again, that's a swing trade, right? But all this stuff, like even within this leg of price, that we've had over here, right? I know a lot of people saying, oh, but you know, I could have held this one like here to the floor, right? But here we've got a bit of a different scenario, right? Because we're trading in a leg of price, right? So when we're trading in a leg of price, we want to have like quicker, take profits off quicker, right? So when you're in trades like this, right, you shouldn't just be holding it and looking for hedges. You should be actively going, okay, well, I need a target below this level, right? Once the low goes, what's my target? Okay, there's a demand over here. Yeah, it's 6.5 years old, whatever. There's my first TP, right? Or say you catch this, you know, my first TP is the low, right? Say you catch this, again, my first TP is potentially the low, potentially the demand level to the left, whatever, right? But yeah, these trades here, because you're not in these significant higher time frame, you're not in at the significant higher time frame levels, right? They need to, you need to manage them differently, and they will be more, those are more the intraday trades, right? That's why it's what we spend most of our time doing, right? Because we spend most of our time intraday trading, right? So we're more likely to you know, have those sorts of targets, right? Because it's what we're used to. But you know, when we're catching trades from up here, right, you're losing out on so much of that trade, right? Because even if you take scalings and you compound it on the way down, whatever, right? Like say, you know, say you do something like this, right? You're bearish in M15, right? We know that that's good. Anytime you catch a lower high, right? Like say you catch that, say you catch that in there, say you catch that in there, right? Even if you've got targets for all of these, right? You're pro trend, so you shouldn't really be closing the whole trade, right? Say you catch that there, say you catch that there, say you catch this here, right? Say you're TPing these at the low, say like your plan says I take 50% off this here, right? Okay, and then I'll just look for hedges, right? So then you've got like 50% of this trade, 50% of this trade, 50% of this trade, 50% of this trade, 50% of, you know, trade over here, 50% of trade over there. And all of a sudden you've got an awful lot of fucking volume, right? That's all risk-free running that direction, right? So when you smash into that level, you've made a bazillion off, but you do have to sell, not like me this week, just trying to buy it. But yeah, when you're pro trend, you should just be trading that pro trend stuff, right? And those are the proper swing trades. Like when everything's in line, right? Like this is just a textbook example of it, right? Because we've got really bearish 4H, right? Here to here to here, right? We realign over here and we give another, like we give a proper lower high here, right? This one is not really a proper lower high because it trades above that, but we give a proper lower high here. So this lower high is just going to let go and take out all of this and then continue running until whenever it feels like it. They're good problems to have and bad problems to have. In my opinion, not knowing where to TP is a good problem. It means you're entering good trades and 90% yes and no. Knowing where to TP is a big problem, right? It's like, no, if you're getting money out of your trades, then it's fine, right? Like that's all right. Like even if you're taking this trade here and you're taking full profit at the low, that's fine. You know, that's all right. That's not a problem, right? How do you know when and where? You just look for like HTF mitigations, right? So here, right, when I got in this, right, where was it? Here, initially my first target was like this, right? Because it's a weekly move, right? And it's just looking at that time frame stuff, right? Like going what time frame to what time frame, right? And then my next CP was down in like, I think I get the EQ of this daily to take most of the, or the EQ of this to take most of the volume off that big short. But yeah, it's like HTF targets basically. Do you trail your swing trades? No. You can, yeah. That's actually not a bad idea to trail swing trades. Personally, I don't, because I'll always end up fucking up. I know what I'm like. I'm terrible with trading stops. But yeah, if you like, in theory, yes, you can definitely trail the lower highs, right? Like this would have been a prime example, right? You just say you're getting up here, right? You take every hedge you can and you just follow structure down, right? And you go, okay, well, I can put my stop. I have a break of structure here, so I can put my stop here. I have another break of structure here, so I can put my stop here. This is where the problem comes in, right? Because you could say I've had another break of structure here, right? I put my stop here. Oh, fuck, I get stopped out, right? And then the trade goes and lets go completely. And then you're sitting there going, I shouldn't have tried my stop. That's why I don't trade, because shit like that always happens to me and it pisses me off. So I'd rather just have targets and look for hedges personally. But yeah, maybe behind 1 hour structure would be better, I suppose. 1 hour structure would be a little bit more protected. You get that. Yeah, I wouldn't. Yeah, you don't get closed below, so you have no low high. So yeah, there you go there. There you go there. There you go there, and you get stopped out there. So yeah, that would be a good way. Maybe 1 hour structure is good for that if you want to trail. But yeah, personally, I'd just rather have targets. But yeah, so it's mainly just about, what's the best way to say it? When you are coming back into proper alignment, right? So like 4H is bearish, 15M realigns to be bearish, right? Or you break alignment, so your 4H bearish, 15M goes bullish, right? Those first couple of trades, when you're catching like this trade here, for instance, if this trade pops, right, this trade here is potentially your swing trade, because this could reach, you know, this we'd be looking at initially, we'd be looking at that. And then after that, if this level goes, because this is, yeah, I'm pretty sure. Hold on. What would we be looking at? Yeah, initially I'd be looking at like this level here, something in here, and just seeing how we react there, right? But this would be a good place to hedge this trade anyway, right? Because we might get that to that to that, right? But again, if I get in a trade like down here at this next theme jig, right, I'm going to be looking to hold that trade to higher prices, right? Rather than just saying, okay, well, when that breaks that, I'll close it. This would be now, because we're counter trend, I'd be much more willing to partial, because we don't actually know when the correction is going to fail, right? If the correction even fails, we don't know. Like there's other stuff going on now that this could be a weekly pullback and shit like that. Thingamajigger, exactly, mate. But yeah, like now, so here it's because we've got this, right? 4H and M15 has now done this, right? So this trade here is the one that can potentially move up to quite significantly higher prices, right? Whereas anything we get in here, right, we need to take volume off at least, right, and look for hedges, right, like up here to run down to take out some form of liquidity, to then, you know, look at something like this, right? There's your next entry, or maybe it comes back down to there, who knows? But yeah, but yeah, does that make sense to everyone, or was that just complete and utter fucking waffle? Yeah, like swing trades aren't that common, but it's very good to know when to hold them, because it just, like, you have no risk on the table and you're making free money basically, right? Like this trade here, like that, it's a perfect example, right? This trade here, right? I mean, I had a bunch of positions in here, right? I took partials off these ones initially here because I didn't know how that would react, right? These ones I held full volume till that low went, took partials there, and then just full TP'd most of them there. And then just let, I think it was there. Yeah, that makes sense. And then let the rest of them, and then let the final position run with the rest of its volume on to down there at the extreme, where I closed like 90% of the rest of the volume. Right. still got like 10% on, and yeah, like, because at the moment we don't know whether this is, like, right now you would guess the available information that this will hold, right? And you're in up here, so yeah, in theory that trade should never get taken out, and you can just, that can keep paying you the whole time, right? Doesn't always work out like that. Like, it's a tricky skill to master, knowing when to swing trade. It really is. It's probably one of the harder things in trading, because you get so ingrained in your habits of taking profits and stuff like that. But when you can really master swing trading is when you can capitalize. Like, you know, I've been a fucking idiot this week, right? I've taken no sales, right? I've still made, you know, I closed like a lot of percent last night, right? Because I had that trade open. So that trade was basically paying me the whole fucking time, right? So like, I can be an idiot all week and still not walk away feeling like too much of an idiot, because at least I managed one trade from last week well. Do you know what I mean? But yeah, does that sort of make sense? And it's really noticing, okay, I am at a key level and a key bit of price action is happening right now, right? This I could capitalize on massively, right? Like this trade here is a perfect example, right? I think a couple of people like shut this around here, something like that, right? Hedge the fucker, right? If you're unsure about it, hedge it before catching the right trade. Yeah, no, yeah, we all have that, mate. Everyone does that from time to time. But yeah. Oh, you did the opposite. What, you tried to buy it? I wouldn't have done that. That seems like a terrible idea. Yeah, exactly, mate. It's all learning, bro. It's all learning, man. But yeah, like, it's just like fucking everything we ever talk about. It comes down to structure, right? Like, you closed all of it at the 4 hour low here, over here, yeah, something like that. Yeah. Do you see how much of that trade you've missed out on, right? Because you're at like a key level there, right? Like, price is not, like, we're not really coming off anything valid to the left, massively valid to the left. We're coming off like, yeah, little shitty stuff, but there's nothing like, this was always the high probability demand level down here, right? There's not a lot going to stop price at that point in time. So it's like, just look for a hedge, man. Like, just instead of that, but then still remember that it is bearish and you need to sell. It's very important after this to reiterate that when it's bearish, you need to sell. But yeah, like, you know, you capitalize. I mean, what, even there, right? That trade runs 1 to 24 with a 11 pip stop, right? So, you know, what are we here? That's a fifth of your trade, basically. But yeah, like, and yeah, like, even any of the trades in here, right? I wouldn't personally be massively swinging for the fences on these, right? Like, I'd have volume off all of them, right? Like, as soon as this low breaks, because we don't know where the pullback is going to come from, right? We could well have bounced off this weekly, you know, this could have given us more of a push up into something up here, come back to mitigate this, right? So trades like here, yeah, get volume off them, pay yourself, you know, just leave nuggets on them, because by the time you get down to here, like, say you've caught this, say you've caught this, say you've caught this, and say, you know, you've caught this, right? All of that combined is you've still got 1% of free money running by the time that hits that, right? But you're not as well positioned, so you need to pay yourself more, if that makes sense, right? But yeah, like, the only time, suppose the easiest way to describe it is the only time you really swing trade is when you think that you've caught a 4H lower high or 4H higher low, or yeah, thingy. That would be the best way to describe it. If you caught one of them, hold the fucker, basically, because likelihood is it's going to go and do some damage. Yeah, and that's, you know, these trades are not only great for Instagram, they're great for your account too. Like when you catch something, you know, say you catch that even without one of my ridiculous certs, you catch that with the 2-pip stop. I think Alex Tricky got that for like 1 to 160, something like that. Right, like 1 to 140. Right, imagine you do that with 50% volume up, right? So here, right, by the time you take that 4H like there, you close 50%, so you crystallize what, 13%, right? Then you close the rest of that there at 1.125, so what's that? Half of that is 62.5 plus, what did I say, 13. So you've done 75% ROI on that trade. Right, for just holding it and taking volume off and being a sensible trader and realizing what you caught. Right, like, and then you've got all of this compounded shit in here, but this one's, you're not doing anything to this trade, you know. Yeah, if it's a 1-pip stop, it's double, yeah, right, or you catch it. But yeah, you know, and like it's, yeah, just stack it, stack it, stack it, stack it, stack it, stack it. You know, and again, it's that whole thing of just realize where you are in this whole range, right? Anything likely, anything you catch in premium here, you can hold volume up. You know, even if it's not at the edge, like anything you catch in premium. Like say you're getting in a trade here, right? Or, well, even here, you can probably hold this a bit because it's actually broken structure there. But once you know, say you catch a trade in here, right? This is never a trade I would advise you to hold full volume on to go and do something like this, right? I'd more be thinking, okay, well, if I'm catching a trade here, I'll close volume here because this is low in the leg, all of this sort of shit, right? But it still makes a bunch of sense, right? Yeah, the importance of zooming out, right? Like it's so important not to get too trapped in just this lower time frame stuff, right? Because again, there's like great opportunity, right? But like today is a great example. Right, like here, right, unless you've caught this, right, which, yeah, I mean, I wouldn't be trying to fucking buy that right there because that would scare the shit out of me. I'd probably be trying to get in like up here somewhere, but yeah, like unless you've caught this, anything you catch in here, if it does take the high, you need to get volume. So understand. Yeah, exactly. Yeah, exactly that. That's the market is fractal. So to understand how you, yeah, exactly that. Like look at what the market is doing on the higher time frame, understand where you are, and understand that if you're trading from a higher time frame thing, then your target should be higher time frame, right? Not 15-minute. Like up here, right? Like the let's take another example. Like say time frame. Say well, yeah, this trade here is a good example, right? I mean, I took volume off this way too early, like here somewhere, but yeah. But say you catch this trade here, right, and it does this, you have to understand that your target is no longer 15M, right? Your entry was 15M, your target was 16% more volume than M15. Yeah, 16 times more. Oh, because of the time. Yeah, in theory, yeah. But yeah, like here, this trade is no longer a 15M trade. This trade is a daily trade, right? You've just got in on a lower time frame. Like this trade, say you're catching like this trade here, right? This trade is not a 15M trade. This trade is a daily trade, weekly trade, whatever, right? You know, say you catch, yeah, even this trade here, this trade is no longer a thingy because you like this has already been the reaction to daily supply level, so it's no longer going to follow through. So that trade there is now a daily trade as well, right? It's a hard skill to master, but when you get it, you know, like it's like this trade here. I know I caught like the top of this, right? I don't, like monster R trades, anything over, I would class like monster as anything over 1 to 100, right? That's like a proper monster trade, right? And even I don't do them that regularly, because they don't happen that often. Most times the market, depending on where you enter, all of this sort of stuff, where you've got and how you're positioned, the market isn't going to give you 100 pips in your favor, right? It's going to give you 50, it's going to give you 30, it's going to give you 20, it's going to give you 10, stuff like that, right? But when you have to realize here, right, as soon as you see this and this reaction, do not fucking close this trade here, right? It's the most dumb fuck thing you can do in the world, right? Because you're missing all of this for nothing, no extra work. All right, you close 50% of this here, you hold the rest to 1 to 200. That trade there flips your account. Right? Yeah, it takes 2 weeks, but who gives a fuck? You don't have to do anything once you're in the trade, you're in the trade. Right? This trade here is a prime example. I mean, I closed this out here for 1 to 50, which was really stupid. But you know what I mean? Like, if I didn't make that mistake there, right? That I caught with 1 pip stop. That would have done. I don't actually even want to look at what that would have done. No, quite a lot, right? 1 to fucking 600. Yeah, you see what I mean? Like, so if I wasn't an idiot and if I'd actually followed all of my shit too, right? I wouldn't have closed that trade for, I would have got 300% more out of that trade, because I should have just taken 50% off there. Just let the rest fuck off. Do what this. Yeah, 4H, man. 4H and daily, right? No, like, yeah. Really, really good swing trades are like here, right? This is again like a perfect example, right? Here we don't get bullish daily structure, right? But we get bullish daily order flow, right? We complete that order flow there, right? We get 1 lower high put in, right? The second lower high, let's go, right? Same over here, look. So we have 4H bullish order flow here, right? 4H bullish order flow here, then it realigns like over here somewhere, I guess that looks like 4H length of time that took. Then we realign, right? We form a lower high here, right? And the second lower high, let's go, right? It's generally like the second lower high that will properly just fuck off, right? And not come back. Like here, if this trade's really going to pop, right, you would expect this to come out, take this out, right? And then this trade here would probably get the biggest reaction in the leg, right? Because they've like accumulated now, right? They've had one accumulation, right? Bought back in, reaccumulated. So now this is the test of the reaccumulation, which will likely pop. Right? Yeah. Generally speaking, the second lower highs of anything are normally better. Like even if you look, you can look at it on time frame, but here's another great example. Right? We get 1 lower high here. Put in, right? The second lower high, just fucking let's go. Right? Never comes back to see the light there. Right? Again, yeah, over here, right? We get the first lower high put in there, the second lower high, just let's go. Right? There's another good example. We don't really get high low there. Yeah, here we get 1 higher low. It's an internal higher low, but the second higher low runs. Right? Here again, we get like an internal lower high. We get a second lower high. The second lower high fully let's go. Here again, I mean, this one let's go anyway, but this is the second lower high of daily. So yeah, that's different. But yeah. But yeah, does all that make sense to everyone? Right? Like it's like just focusing on that higher time frame shit to really know when to capitalize on your trades and when not to. But yeah, I hope that was helpful. I feel like I waffled a bit, but I normally feel like I waffle a bit. So yeah, does anyone have any questions or anything about it? Is that character trait for EU or GY? GJ? Stop waffling, Chucks. Fuck off, Woody, you prick. GU. What, the second lower high thing? I don't know, but I would guess it is, yeah. Like, it would make sense to, because it's like it's the redistribution of the reaccumulation, basically, right? So you're always going to see like price do this, 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 complex pullback, buy, right? It's normally on any pair, because essentially you'd be looking at a sort of a Wyckoff schematic, right? So you've got like UT, UTAD, test, and then whatever they call this, LPSY or whatever, right? And the LPSY is literally the last bit of supply or demand in the market comes in and then just gets wiped out, and they just, yeah, fully let go. If you go and look at like any skem pictures or whatever, last point to supply that. If you go and look at any skem pictures or whatever, they all look similar to that. Like, it will generally be the next lower high that really fucks off, or the higher low, basically. And they are always the best trades. You know, go back over any really like killer trade, it's normally the second lower high of anything, because you've got that commitment then as well, right? So they've decided direction, they just got to redistribute and then fuck off to hell, basically. But yeah, cool. I hope that was helpful. Anyone questions about it, anything like that? No, perfect, amazing, love that. Best time. No worries, brother. Yeah, I hope so, mate. Like, it's LPS wise the flip. Yeah, basically, isn't it? Like, I haven't looked at skem pictures in a while, but yeah, that's basically what it is. It's where they fully take control, right? Like the test or the UTAD is them fucking everyone, and the test is them restacking. Then the LPSY is the full take control of the market. We're gone. But yeah, cool. All right, well, hopefully that helps everyone with targeting and shit like that. Cool. What is Sunday Zoom about? I'm actually away this weekend, so there may not be a Sunday Zoom this week, but I will make up for it next week with something. I don't know what. I don't know. Send you nudes or send you pictures of my feet or some weird shit like that. Yeah, down to Devon, mate. Not that I live far away, but yeah, just down to Devon. But peace, guys. Have a good one, and I will speak to you all a bit later. All right.